Hello, traders. This is Michael coming to you from GammaEdge on Wednesday, November 13th, with our pre-market morning strategy and briefing session. SPX game plan's been posted, single stock game plan, as well as the market trend model. So make sure to review those three pillars. Again, as we always do here at GammaEdge, we look at sentiment, structure, and trend. We'll start with trend. Looking at the market trend model overall, we can continue to see weakness and failure of the bolded white line CT below the moving averages, and now we have significant slope down on the moving averages. We discussed this previous day. We were starting to see some consolidation and weakness coming into the market, and that sellers were looking or trying to take control. And then we talked about if we saw a immediate failure in the morning yesterday of the bolded CT, that we would continue to manage risk and reduce our exposure in the overall market, or possibly look for shorting opportunities. So until we see the bolded CT start turning back above the railroad tracks or the short-term moving averages, or at least some sort of consolidation, caution is warranted, as I discussed yesterday at the end of my video. So that's how we'll head into today. And some other factors, other key components that we're looking at are also showing possibly some more short-term weakness. Looking at the full expiry, the SPX all expiries turned on. We're still call dominated above and below spot price, which is a bullish look. Overall structure, neg X is down to 28,000. We see the expected move up slightly to 0.81%. And net gamma is 170 million here. We do see the transition continue to widen slightly on the DEX transition that we're looking at. Gamma transition is narrow, 6,000 above us. P-trans, P-gex, really tight there. So the 6,000 level will be very important as we continue to oscillate around there. We discussed that multiple times yesterday, that we could see this price oscillate around. Bottom of the transition there, 59.55, 59.50 would be an area that I would watch on a pullback to see if we do see buyers or a demand area step up. If we get below 59.50, then we could see some more weakness down towards 5,900. That's a round number, extremely large net delta level that I'd look for opportunity or possibly supportive type action, demand type action into that level right there. To the top side, 60.50 to the upside looks like that area that we'd probably see some stalling. We saw stalling around 60.17, 60.20 previous day, and we didn't even reach that level yesterday. So we'll continue to watch that. But call dominated on this structure in the longer term, so that is supportive overall. We do see the delta balance continue to weaken on the right-hand plane, which we discussed yesterday. We saw that was bearish. Today, we saw a weak bear yesterday heading in, and I said that price appreciation was going to be very difficult with that structured look. And today, now we're bearish, which is a little bit even stronger on the right-hand plane. So the OTM call speculation continues to degrade. We're watching that in some other areas also with the single stock game plan. Call speculators continue to be reduced. We see the GEX ratio continue to pull back as price continues sideways. So as we talked about yesterday, one of these will win out. Either price will continue sideways, GEX ratio will reset, and then we'll have price appreciation. But as of now, short dated puts continue to go into the complex, dropping this ratio down, and we see obviously the calls being reduced. So that changes your ratio. The weak bear development for Thursday and Friday is a new development. So again, that OTM call speculation heading into the rest of the week continues to degrade. So this could keep a lid on price appreciation to the upside. So we'll continue to watch that. SPY became very bearish very quickly. You see here from Wednesday, Thursday compared to what it was yesterday. So we talked about yesterday, it was still holding its own, but now it is becoming very bearish. Now, we've discussed this before, that SPY could be used as a hedging instrument to the SPX and vice versa. So that may be what is happening within the overall structure here. GEX ratio continues to drop, and then we see the projected delta balance obviously continue to drop. So understanding that most likely this will keep a cap on price action to the upside on SPY unless we see some sort of change and significant monetization, and then OTM call speculation come in. So just a weak look continues on down the days ahead in SPY. QQQ, we're continuing to see that weakness come in as we discussed in the other ETFs and sectors. So again, weakening in the right-hand plane, bearish today, and then weak bear on Thursday. Again, price appreciation will be difficult unless we see that OTM call speculation to the upside. Again, that doesn't mean it can't not happen. Obviously, 0DTE, we could have a significant change of sentiment and structure, and OTM call speculation come in, and it could change this. But as of now, the data we have heading into the day, it looks like price appreciation would be very difficult with this overall sentiment and structure that we have presenting to us this morning. DIA continues to weaken, obviously, right-hand plane OTM call speculation. So you're pretty much seeing a theme that the OTM call speculation continues to degrade and weaken, which most likely, again, will prevent a significant price appreciation. 0DT put dominated above and below spot price, so now that is a weakened look. Right-hand plane strike, we've talked about that 6,000. So if we come up under that 6,000 level and see some sort of failure, that may be opportunity to short. We'll talk about the DS range here in just a minute, which is 60.20 to 59.50. Again, to the downside, I would be looking for that 59.50, 59.55 level to be some sort of demand type action, unless we see the call centroid and put centroid continue down with negative slopes on the vol M. And then we'd be looking under 59.50 for a move possibly down towards that 5900 level. Now we see that short strike at 6,000. That's why these are flipped. We see PGX there at 59.75, but at the utmost, we'd need to get above 60 or 6,000 and see the call and put centroids and positive slopes on the volume command for us to move anywhere up towards the 60.20. So again, discussing that 6,000 is probably going to be difficult to get over. So we'll continue to watch that throughout the day, but noting that we are heading into the day put dominated and a decent amount of negative net gamma there heading into the day also. +1 DTE, we do see it's call dominated, but we're watching obviously that right-hand plane decrease in the OTM call speculation. We see transition here is very narrow, 6,005 to 6,010 for the +1 DT. So again, trying to get above that level to head towards 60.20 or 60.50 will be what we'll be watching. And then below that, you kind of see this bell-shaped curve here down towards this 59.30, 59.50 picks up pretty significantly there. So we'll watch those levels if we do see a weakness down towards those levels. So thesis for today, let's go ahead and jump into the SPX chart. I've overlaid our if-thens from the SPX game plan. Again, you can copy and paste those. Sorry about that. You can copy and paste those on the chart so you have those readily available. This is a previous TA level I talked about yesterday. We were watching that kind of the bottom of the range on the web app yesterday, and that's where we saw that significant V bounce from. So 59.60 will be extremely important. We've drawn that at the bottom of the drunken sailor range, and we have our if-thens there. So a price reaction around 59.60 will kind of measure what the sentiment looks like, and if it's a kind of a V-shaped bounce, or we get a slight bounce and then just chop around this level, and then we see vol M with negative slopes, then I would look for an opportunity to short. More weakness down towards 59.25. If we do hold, caveat is we'll be within the drunken sailor range, back and forth, very choppy. Again, move up towards that 6,000 level. You see COTMP there. That's really going to be that level in sand for us to try to get over. And where we had multiple failures yesterday, we had kind of demand, support action turned into supply resistance, if you want to say that really quickly. So for me, that upside is where I'll be watching unless we see, again, significant OTM call speculation. I'm not anticipating us to get above that 6,000 level. So chopping between 6,000 and 59.60 may be a likelihood, or even that kind of 59.80, 59.75 level. So if-thens laid out, make sure you're studying those. Again, 0DTE. We may see volatility pick up slightly, just back and forth. Put dominated negative gamma environment can cause outsized moves very rapidly and very quickly. So just make sure you're understanding the risk if you're 0DT trading. Again, I will not be doing much today with the MTM market model and the structure and sentiment where we're at. I'm really not seeing A+ setups. So we'll just wait for our fat pitch and just manage risks today. So that's it. Everybody have a great day. We'll see you in the Discord in a few minutes. Thanks.